Welcome back to the Trader Vision 2020 free trial video series. My name's Ed Carter, and along with my partners Rick Sadler and Doug Campbell, we're the guys that bring you the Trader Vision software. Today we'll talk about planning a trade and really start using Trader Vision to your benefit. Specifically, I'll give a synopsis of the TradeView form. We'll talk about the trade description section, the trade plan section, the actual execution section, and then the trade management section. After that, we'll go through an example of how to plan a long trade, and then we'll do a brief summary and talk about the next video in the series. So, with that said, let's get started. In the previous videos in this series, we downloaded and installed Trader Vision. We've walked through the setup, and we've also gone through planning trading goals. Today we'll talk through planning a trade, and in particular we'll be looking at a long trade. And to do this we'll be using the TradeView form, so we'll click the TradeView. You'll notice there are 4 sections to the TradeView form: trade description, trade plan, actual execution, and trade management. In addition, there are buttons that will show in all sections of the form, including chart-based entry, copying the plan to actual, copying the plan to a clipboard, printing, creating a new trade, saving the existing trade, and canceling the changes that we're working on. The trade description section of the form is where we'll specify how we'll categorize each trade. These details will be used for later judging the performance of a trade, as well as tracking our overall performance. In this section, we would select an account, enter a ticker symbol. The default direction that we set up earlier was long, but we could change that to short if that's what we wanted to do for a trade. We would select a short-term market bias from the drop-down selections that we talked about in a previous video, as well as a long-term market bias. You would enter a signal. By default, the system comes set up with candlestick signals. However, you can enter any type of trading signal that you use, perhaps moving average crossovers, particular indicator setups, for example, a MACD convergence or divergence, a stochastic crossover, any sort of signal that you happen to trade. You would also enter a trading pattern. Again, this comes pre-populated for long trades with a set of patterns. However, you can change or modify these in any way that matches your trading style. Under the entry trigger, you would enter a trigger for your trade. For example, if you were trading a breakout, you might enter a breakout price above which you wanted to enter. If you were trading a pullback or looking for an inside day, you might have a buy box that you are using. The trade setup is really just an area where you can put more details for your future reference, as this trade record becomes part of a permanent trade log or journal that you can refer to in years to come. The planned trade duration is whatever you set up in the default within setup for this account. And of course, you can change that on a trade-by-trade basis. This is only really used for estimating the cost of shorting, so for a long trade, it's not an integral part of the system. The next earning report, again, this is something you would look up and enter, and that is there to remind you whether or not you want to be trading through an earnings report period. In this case, we've specified for this account that we are going to plan the shares to buy or sell, in this case for a long buy, based on the max dollar loss to the stop or the max risk that we're willing to take between the entry price and the stop loss price. And again, this was specified at the account level, but perhaps you change that on a trade-by-trade basis based on something like the overall market condition. In the trade plan section, we start getting into the meat of the tool. This is where you would enter a price for entry, and you can have up to 3 entries. as well as the number of shares that you are going to buy. The first thing you would enter is a price for entry, let's just say $10, and a stop loss price, let's just use $9 based on our earlier example. And based on the risk level we specified under trade description, it would tell us we could buy 237 shares. If we enter 237 shares, it then calculates out that that would be 2.38% of our account, and the total cost to enter, including commissions, would be $2,376.36 at that $10 price. Our trade break-even would be $10.05. In other words, the trade would break even if it went up a nickel. However, to make our trade goal, based on the goals we set earlier, the trade must reach $11.22, and that's a 12.2% gain. We would then enter the targets we have for the trade. For example, let's say $11.50. And $12 and $12.50. Of course, these would be numbers that have to match what we have going on in the trade. You'll note as we enter the number of shares to exit at each target price, the stop loss price, or shares remaining I should say, automatically updates. So if we were to reach all three targets, this is what that trade would look like, including commissions. We would make $142.33 at that first stop, and as you'll note, that's 14%. So if we were to sell all of our shares at that first stop, we would in fact make our goal for the trade. However, if we just sell 100 shares at that level and continue to ride the others while also moving our stop up, we would make 143 at the second target, or a total of almost 9%, and another 148.35 at the third target, which is a 23.67% gain. Overall, the trade would be 18.13%, and as you can see, we're risking $249.72, which was less than that $250 that we specified as our max, for the chance of making 344.15 at the first target. So at the first target, stop loss versus first target, our reward to risk ratio is only 1.38 to 1. And for that reason, this field is pink, giving us a warning. You'll also notice that a maximum stop loss of 10.48% is a pretty steep stop loss to take. So, as we're planning a trade, we need to take several things into consideration. Do we want to trade this big of a percentage of our account? Do we want to trade this big of a dollar block? Are we within our maximum risk tolerance for the trade? And even so, are we willing to risk 10.5% on that trade? Finally, are we willing to accept a 1.38 to 1 reward to risk ratio? All this must be balanced against the fact that based on these target prices, we would be able to make our trade goal if we sold the entire position at that first target. As we make this trade plan, we can also attach an image. We click this button and the pop-up box will ask us what image we want to attach. We can then attach a JPEG or GIF or any other type of image file to this trade record so that down the road, perhaps at the end of the year, perhaps 2 years from now, we can go back and look at this trade and see the chart just as it appeared as we were planning the trade to consider what we had in mind when we set up this trade plan. If we were happy with this plan and we wanted to copy these prices and shares to the actual execution section, we could just click Copy Plan to Actual. In the actual execution section, it's very similar to the plan section, with the exception that we now have dates, and we also have the ability to enter a cost basis adjustment. This could be used for things like dividend receipts, for the cost of a hedging trade you might place, or for other adjustments that need to be made to the cost basis of a trade. For expediency's sake, let me copy plan to actual, and you'll now see that we've got these prices and shares copied down into the trade. We would then enter the entry date at the time we were able to achieve the entry price, and the target dates at the time we were able to reach these prices and make our sales. You click the drop down and select the appropriate day from the trade calendar. As you do that, you hit enter or tab, and the data is then calculated. In this case, at 237 shares, we've got a $2,370 cost basis plus $6.36 in commissions based on what we have set up for this account. We bring down some information from the trade plan to keep it visible for us if we just have the actual execution open. We can see that we need to have 1120 on the stock price to meet our trade goal, and we need a break-even price of 10.03. The reason these are slightly different than what we had before in the plan is because we've yet to incur any commissions on the targets. As we look at the trade, we can now see what the open reward to risk ratio is for the remaining shares between the current price, the entry price, the next target above, and our stop loss that we have currently set. In the trade management section, you'll note that we have recorded what the SPY price was when we entered the trade, and this is based on the fact that we had specified the SPY as our comparison ETF. You note that we have 237 shares still open. Our cost base is still open as $2,370. Our open gain loss, because we've sold no shares, is $23.76.36, and that's a 100% loss at the moment. If I had specified a ticker, it would have looked up the current price and would tell us the current position of the trade. We can then record any trade notes that we have as the trade progresses and make any adjustments. For example, we can enter that we've moved the stop, enter a new stop loss price, and the date on which we're making this change. We can do that 6 times. We could also adjust a target if we have a valid reason to adjust the target prices mid-trade. Okay, that's a good basic overview of the TradeView form. Let's now look at a specific trade and enter that as an example. Now, the first thing I want to point out is that I'm recording this video the day following the British Brexit vote, and so there are very, very few good-looking long charts. Nonetheless, let's take a look at a couple. Here we have TDOC. You'll note that we have a W pattern. We also have a resistance level at 2 places that held as support there and held as support on the day of the Brexit vote. I would call that almost a belt hold candle signal, and I like the fact that it did hold support. It closed at the high of the day, or very near it, and we have a good pattern. If we draw the other resistance levels, I believe there's another one in here someplace. Someplace in there like that. And if we look at what's available to us in terms of movement from today's price, that would be about let's call it 16%. So that might be a nice move. On an inside day, I think I would consider buying that. So I would be looking for some sort of purchase, probably in the upper half of that range, something like this. Looking at somewhere between, say, right below this support level. So let's say somewhere from 1270 to 1310 would be the price I'd be looking to buy. And I would put a target. I would probably have a target about here, catching what looks like a little resistance there. So that would be my first target, and my second target would be at this area here. Let's call that, to be conservative, let's say 1515. Okay, with that trade chosen, we need to look at the overall market. So I'm going to pull up the SPY ETF, which tracks the S&P 500, and let's expand things so that we can see it. We need to look at what we think the short-term market bias is, and then what the longer-term bias would be as well. As we look at the overall market, even excluding this terrible candle from Friday, which was the Brexit day, I would say that for a long term, since 2014, we have been chopping sideways within this channel. Yes, there have been a few little excursions outside of that range, but in general, we have been chopping sideways in that range. If we look at the relationship to the blue 50 simple moving average, we can see that we're now below the 50 simple moving average. And if I hide some of these other indicators, we can see that the 50 simple moving average is moving sideways. So then, if we pull up Trader Vision, we can enter TDOC for the test account. For a long trade, we would say that the short-term market bias is range-bound and that the long-term market bias is below its 50-day moving average, and that 50-day moving average is flat. You will note that we've received yellow warnings with red fonts for both the market biases, and these warnings are then given to us in English up here. Are we sure that we want to be trading against both the long and short-term market direction? In this case, I don't consider this, well, perhaps I would consider this a belt hold. So we will call that a belt hold pattern. This is a rounded bottom breakout. It is also a W. I'm going to call this a W pattern. My entry trigger is going to be that buy box, which I believe I said was 1270 to 1310. And my trade setup description is a belt hold on Brexit. Consolidation off W top. Okay, we don't need the planned duration. I am going to adjust, based on the market volatility, I'm going to adjust this down to $250 for this particular trade is the maximum I'm willing to risk. I guess I should type the symbol correctly. The next thing that I need to look up is the earnings report. In this case, I have looked up the earnings date and it looks like they report about August 10th. With this entered, we're now ready to go on to the trade plan. I had specified an entry in that box. Let's just, for argument's sake, say that I get a 12.85 entry price. I'm going to want to put my stop in here tight, probably just below that buy box, because if this support level fails here, this little shelf, I don't want to be in this trade in long capacity. So I'm going to put my stop at 12.65, and it tells me that I can buy 1,100 shares and still stay within my $250 limit. Let's just put in that 1,100 shares and see what it tells us. Wow. You'll note here that it's telling us that if we do trade 1,100 shares, that's over 14% of our account. And you'll notice the bright red warning, as well as now being part of a second warning up here. First, are you sure you want to trade against the short and long-term market directions? And secondly, are you sure you want to trade a position that large? In this case, I don't. So let's take this down to 500 shares, see what that does for us. 500 shares is still 6.4% of our account, and that's still probably too rich for my blood. What happens if I drop this down to 200 shares? At 200 shares, I'm only trading a little over 2.5% of the account. I can certainly handle that. If we enter within this box, where is our first target? Well, as you'll recall from the chart, I said it looks like we have some resistance right in this area. And so I'm going to put my first target in at $13.75. At that target level, I will sell half the position, and that would be a 6.34% gain. We're then going to run into more resistance up here, and as you recall, there were more touches back in the history. So I'm going to err to the downside of this, and I'm probably going to put my exit about $14.95. So at $14.95, if I were to sell the other 100 shares, what would that plan look like? Well, that particular entry would make a 15.62% gain. Overall, we'd be at just under 11%. We would not quite be making our 11.36% needed gain. However, we do have a pretty good risk reward to the first target. As you'll note, we're risking a little less than 2%, 1.98, for the possibility of making 6.58%. That's a 3.25 to 1 reward to risk ratio. And that may be enough for me to consider taking this. The break even is only a few pennies above our entry price. Even though that first target is not going to meet our goals for the trade, we can certainly meet our goals well before we run into our upper resistance here, which would probably coincide with the 200-day moving average at that point. And so this is something I'm going to consider taking. What I would do then is save this trade and leave that trade staged for Monday morning's entry. If I go to trade log, I would be able to see this trade, and if I'm able to get the price that I'm looking for an entry, I fire my order to buy. I would just click this order again, open it back up, and then I can adjust the prices, copy the plan to actual, and I would adjust the date and the prices as appropriate. Okay, that's one example of how to use TradeView to plan a long trade. To do a quick summary, we went through the TradeView form within TraderVision. We talked about the trade description section used to categorize our trades, We talked about the trade plan section where we plan what our trade is going to look like, what our rewards and risks look like, and find any warnings that we may have not noticed on the chart. And you would be surprised how many times you'll find a chart that looks very good. However, when you actually run the numbers through the trade plan, you find that there is a serious deficiency in one area or another, and you probably should look for a different trade. We talked a little bit about the actual execution section, and we will get further into that in the next video. And we talked about the trade management section where we can record our notes and adjustments to prices. And then we looked at an example of using Trader Vision to plan a long trade. And we luckily found that with some caveats, that trade may be viable for Monday morning. And that's it for this video. In our next video, we'll talk about managing a trade and go further into the actual execution and trade management sections of the application. I want to thank you very much for listening, and I look forward to talking to you soon.